All right, good morning, everybody. Welcome to Set the Market. We'll get started in about a minute or so. Just want to quickly do the audio test. Here we go. Okay. Here we go. Yep, good morning. We're going to get started in just a minute. All right, perfect. Can you guys hear me okay? Great. All right, let's get started. Good morning, everybody. It's Serge Berger here from the Study Trader. This is our Set the Market morning show. We're going to do 10 minutes or so going through what we think are some of the most important things to focus on here today and sort of right now. Keep in mind we have CPI tomorrow on Wednesday, and so wouldn't be surprised to see a bit of range-bound trading here this morning or today, and that's probably a good place to start. It's a good reminder that if we look at the equity indices, again, I've been saying this now for all year. In fact, a bit longer than that. We remain range bound. The S&P is range bound, so just keep that in mind before you sort of put on too many bets. We are also seeing certainly money continuing to come out of mega cap tech stocks at the margin. That's not an all out sale, but it continues and it's accelerating. It's moving into other parts of the market that we've been talking about. Among other things, we see things moving into money moving into China. We see money moving into commodities. So that's kind of the second thing I want to go through this morning. So range bound, just keep that in mind. I keep reiterating it because I still see a lot of people making outsized directional bets, hoping for fresh all-time highs any minute now. And while that certainly can happen, the reality is we remain range bound in terms of the equity indices. So that's as far as that goes. Now, if you look at what's kind of keeping a lid on things, it is the mega cap tech stocks, right? So let's just go through some of these larger names and you can kind of see what I'm talking about. Here, for example, is Apple, and Apple just can't get out of its own way. It had a rally in late December. Again, a lot of that was end of the year stuff, and since then, basically, it just can't go anywhere. And as we started this year and we finished late last year, my concern was that a lot of people are going to be in this, blindly buy the dip mode and hoping for fresh all-time highs in their favorite, 6 or 7 stocks that they all know. But when that stops working and it's already no longer working, it can come back, of course. It's going to cause a problem, not just for their trading focus, but also for their broader portfolio, which is largely long S&P 500 via a whole bunch of individual stocks, which are highly correlated to the S&P 500, or vice versa, actually. Okay, so that's a big concern that we have, and for individual investors out there, we are going to touch on this here in about 15 minutes from now in our Market Rover Inner Circle member session, and we're going to go through more of the details on that as we start looking at some of these big names in terms of what the Market Rover is telling us. We're seeing warning signals. Microsoft too. This is not exactly the kind of chart that gives you the warm and fuzzies in terms of hoping for V-shaped reversals back to all-time highs, and so. This is where you need a process and a tool. We use the Market Rover for that, to measure and map when these things change, and they're changing at the margin. The question, of course, is where's money moving to? Well, again, it's not an outright exodus in terms of selling every single share of Microsoft that people have. That's not the point. But they're at the margin looking to scale down or at least rebalance those massive trades. And that's causing, a chain reaction and looking for opportunities in the other parts of the market. So among other things, we have seen now money move into things like commodities. This is the DBC ETF. Um, what's interesting is that we're seeing these moves happening in these commodities despite the fact that the dollar remains pretty firm. Typically speaking, you would see, a some help by a weakening dollar, which would then propel the commodities higher, because as these things are priced in dollars, all else being equal, if the dollar moves, then those commodities have to reprice to remain the same value. But that's not what's happening here. It's literally absolute strength in some of these things. So commodities, you look at natural gas, which we actually received a fresh momentum signal, I believe. Let me have a quick look at it. UNG natural gas is the UNG ETF. Yeah, we just received a fresh momentum buy signal by the TSD trend or momentum indicator a couple of days ago. It became valid yesterday. This morning, natural gas futures are up another 2%. Stuff's volatile, right? So don't kid yourself, but it is something that we are seeing, and it continues looking more and more constructive pretty much every day. And then, of course, China, and we've been talking about this. If you're a Market Rover Inner Circle member, we added Alibaba BABA the watch list, the active watch list a couple of weeks ago. This is what Alibaba is doing now. You can see it's pushing higher. In fact, I literally just seconds ago, the stock now hit our profit target at 115. I couldn't make this up if I tried. So if you are part of the Market Rover Inner Circle, let me quickly share it with you. These things look bullish, right? So this is all this the Alibaba chart is representing the movement in the FXI, which is the China large cap ETF, U.S. listed, and of course, which in turn more or less tracks the Hang Seng Index. So, these moves are very bullish. We think there's a lot more to go here over time. It's going to be, ups and downs and volatile at times. But if we see money rotating at the margin out of these mega cap tech stocks, this will be part of where they seem to be going, at least for the time being. So quickly on Alibaba, just so you can kind of see this. So inside our Market Rover, and if you don't have the Market Rover, please make sure you reach out to our team. You can just email support@thesteadytrader.com. So I'll quickly share this with you. So our active watch list here, I'll quickly share it for everyone here. You can see Alibaba BABA, and we received a fresh buy signal a couple of weeks ago, and pre-market this morning, like literally right now. And again, we have a target at 115, initial profit target, and right now, this second, or just a few minutes ago, we actually received pre-market Alibaba has reached 115 pre-market. It spiked higher, so we think there's a lot more to go in that trade. It's also potentially some AI stuff there. If you think about DeepSeek and all those things, where money could be moving into those parts of the market. So that's something that is happening. And again, it's a lot of people are going to miss this because they are focused on Microsoft and Apple and Nvidia, and they're likely going to miss these moves. And we don't want to be in that camp. Last thing I want to quickly mention from my perspective is Tesla. I did mention it yesterday. It is not looking very good right now. That's not a long-term call. That's just saying that I keep saying this. We had our buy signal in October of last year, both from a trend following perspective and from a momentum perspective. And actually, right now, if you look at on the 28th of January in Tesla, and so far the stock is down about 12% from that. Now I'm going to leave you with something here, and again, these are the kind of things that I just hope people wake up to this year, that you need a process to understand when these trends change. Just like what we're giving you here with Tesla, with Alibaba, it's the same thing with something like Tesla, where we just have to know when these trends change. Now, Tesla remains in a bullish trend. And you can see this is the buy signal that we got late last year. The stock then basically doubled, and we said, hey, good enough for a double. The at-the-money call options were up $22,000, and so now it remains a bullish trend, but it's wobbly, right? So it's bearish momentum. So there's always the difference between the trend and the sort of more near-term momentum. Those are the two distinguishes we make. And I'll leave you with this on Tesla. So this is more of a fundamental call. And it just kind of shows you that. So the machines, the machines don't care. The machines will buy when they see flows happening into a stock for whatever reason. So here's something interesting. I'll leave you with this. I got this off of Twitter. I think it's interesting. I'll just read it to you quickly. So what this guy's arguing, and I don't necessarily, he's almost like a bit bearish on the company as a whole. I look at it more as a where's the stock now from a momentum perspective where it was before. So basically, at the end of 2022, the market was expecting $7 worth of EPS, and now the consensus is about 3. So basically, there's a lot more bearishness in terms of what people are expecting, yet the stock is at a much different level, much higher. So, this can go a lot further, as this guy argues. I wouldn't disagree. I just think, there's a lot of narrative, and Tesla is probably one of the more, it's an extremely, it's a stock driven by emotions. And so back in 2022, the stock was trading, lower, and again with much loftier sort of forward expectations. So that's what's going on with Tesla here. So I just again, it's just another sign of yet another stock that is holding up, or has been holding up, the broader indices. Seeing outflows, and so we're seeing money moving into things like China, commodities, again, things that people have absolutely no, Europe, right? All the things that people don't think have any future, and that's exactly what's happening. And so that's probably going to cause a lot of people to have big down years this year, 30-40%, particularly the people that have never seen a cycle and never seen something a bit choppier. So hopefully we're able to help you here with getting a bit more realistic and having a process. It's not hard to make money when things bubble higher every day with no volatility, and it's the same 6 stocks for 10 years. That's not hard, but that's also not normal. So hopefully we're able to help you and give you some perspective. Inner Circle Market Rover members, we're going to see you in about 5 minutes over in the member session, and we are going to look at some of these trends in much more detail. There's a whole lot of more trends that we're watching very closely. So get your Market Rovers ready, and we'll see you over there in about 5 minutes. And Set the Market will continue here tomorrow morning at 9 o'clock Eastern, as we do Monday through Thursday. Please make sure you give us a thumbs up, subscribe to the channel. Very important, that way you're updated real time when we go live, so you don't miss these updates. And have a great trading day.